And she has got a volatility survival guide for us today, including 3 buys and a bail. Healthcare, Merck, outpacing the averages. Gina, this is your healthy buy play, I would imagine.
Absolutely. This is a stock that we've owned actually through the pandemic. This is a stock that has about half the beta of the market. And in volatility, you want to reduce your beta, but despite that, it is a strong performer. It has done extraordinarily well. Revenue has grown, and not just because of Keytruda, but also because of, Gardasil, which has been an absolute knock the lights out, the HPV vaccine. And if you look across their drug pipeline, they have 116 projects in various stages of their programs. And so this is a company that's got a tremendous pipeline, very strong forward expectations, and is priced really well, and it's cheap. It's amazing how cheap it is, and it's paying a 3% dividend yield.
We got to eat, we got to wash, and Lord knows we got to put mayonnaise on everything, extra mayonnaise on everything, and that may be a good reason to buy Unilever. Of course, they own Best Foods and Hellmann's.
Absolutely, and they own, and quite frankly, now that we're back in person, and in a lot of ways, showering is back in vogue. Unilever is one of those companies. It's domiciled in Europe, but 78% of its revenues come from outside of Europe, and it has been doing extraordinarily well. This is another one that has, reasonably low beta, but it's also paying a 3.6% dividend yield. So, cash is great. Defensiveness is great, and this is something you need.
They just built a giant new building next door to us here, and I just watched the quality of the cars. If I see a lot of new cars going in, that'll be my signal on Unilever. The final buy is Deere. Shares on pace for their worst week since May. That's not good, but still up 2% for the year. 4 straight positive year, a company record. Do you think there's more room for Deere to run?
I do. I think Deere is getting hit because they guided lower. But even with their lower guidance, they're still expected to have a very strong return. And the reality is that ag tech, which is really where Deere is leaned into in terms of really building more and more technology into their tractors and into their various pieces of equipment, that's only going to go up. Right now, prices are soaring in agriculture and food. And so the need to boost crop yields is very high. And farmers are making those investments.
All right, those are the 3 buys that you would like, but there is one to bail on, not one to grow on. That was in the 80s, the NBC, between commercials and cartoons and whatever. By the way, all good ones. Snap. Snap is snapped. The stock down 80%. Is there any reason to own this?
There is no reason to own this. This thing is high beta. It's really high beta. And, it is incredible. It's not that useful. And if you look at where Snap makes its revenues, it's from advertising. And advertising just hasn't come back yet. And I think with all of the turmoil, with the Fed raising rates, expectations of a recession, ads just aren't coming back in the same way. So, while it may be cheap, it's cheap for a reason, and this is one to stay away from.